I'm Charlotte McLeod with investingnews.com, and here today with me is Chris Blasi, president of Neptune Global. Thank you so much for being here. Great to have you.
Thank you for having me on, Charlotte. It's great to be on with you again.
Really good to be catching up with you. And we are, of course, speaking again after our last conversation all the way back in March. So a lot has changed for gold since then, I think. At the time, we still had people wondering if gold's price move was real. And you assured us, yes, it was real. And definitely that has turned out to be true. So I want to start by taking a look at gold and its price move. So you were bullish on gold at that time, but did you expect the extent to which we've seen gold move in 2024?
I really did. And in some respects, I think the kind of moves we're seeing in 2024 are a little late, right? I mean, I think it could have happened a while back. There's still very little participation really on a grand scale by the investing world. It's really a small number of people, which I think will grow over the next several years. A lot of the buying is what you call official buying, which adds to the bullish argument. And that, official buying, really, we're talking about central banks of the world. I think one of the newest ones popped up is they had kind of denied that they were buying gold, and it turned out Saudi Arabia has been buying gold too, kind of trying to do it clandestine. But the point is, we even have some great graphs and charts just showing the growth in central bank buying or official and the decrease in their purchases and their holdings of treasuries. So yes, I think it's not a surprise to me. I think it could have or should have happened 2 years ago, but I'm glad to see it playing out.
Yeah, I think that's an interesting perspective in that, we really should have been seeing this sooner. And so, of course, there's a lot of different factors moving the gold price higher right now. If you had to pick out the most significant driver, what would it be? Would it be those official purchases from central banks? Would it be something else?
I would say it's the reason why those central banks are purchasing. They are purchasing, and the thing about gold is it's actually quite simple what the drivers are. I think sometimes people want to overthink something or make it more complicated. And that may make sense on, alternative investing in real estate and private equity and such, or maybe, private credit in these markets. But gold is simple, right? Gold is money. It's measured by fiat currencies, whether it's the euro, the US dollar, the yen, and it's rising in all of them because the creation of these fiat currencies is growing exponentially, right? The debt and the money printing. And that's the driver for gold, right? So therefore, the central banks see that we are devaluing this currency. A lot of people don't get it. They say we have inflation. Well, that's what it is. Inflation is the devaluation of the currency. And the move is on for sound money. A lot of listeners have heard this for years, and hopefully they acted on it. But it's been predicted for over a decade. It's all playing out. If you really look honestly, for 24 years since the start of this new millennium, gold has done what most of its advocates have predicted would happen. And unfortunately, some people think now the train has left the station, but that's not the case at all.
Okay, and looking a little bit more at trends driving gold this year, one thing I've been hearing about is the importance of Eastern buyers. And I wanted to get your perspective as, a Western precious metals dealer on trends that you're seeing in terms of buying over here, especially because you had mentioned earlier, even though the price is at such high levels, we're not really seeing as much interest as we could be yet.
That's a great point. So, you'll hear from a U.S. investor, oh, gold is at its high, so why would I go in now? And I think that's a complete misunderstanding, and I'll get to that hopefully in a minute. But that is also confirmation that this is not a high, because you would assume, and I think we'd agree, that the central banks in the world are pretty knowledgeable. They have a real seat at the table. They're even privy to things that you and I and a lot of people we may follow and listen to do not have access to. And they are comfortable buying gold at this price. So if China, Russia, Turkey, Saudi Arabia, UAE, all these countries, Poland, buying gold at this price, they obviously think that they're not overpaying and that they would have been better off in dollars, right? That is going to reverse. and it'll take fewer dollars to buy that ounce of gold than it is today. So I think that's the first confirmation. I think it's what unfortunately a lot of regular, or we'll call the typical retail type investor, gets misled. And back to, is gold at its high? Well, gold is not a stock. And a stock can be bought at a high, right? If you use, common metrics like the PE, you're looking at, and it's like, hey, how much more can this company grow? How much more market share can they get? Is their pricing power going to be maintained? Is it going to decrease? So a stock can hit an overvaluation based on, why it's trading and how it becomes more valuable or less valuable. But gold isn't an operating business. It's measured in a quantity of debt or fiat money. And it's just, if that quantity of money printing, if those dollars, if that debt continues to grow, well, you're not at a high for gold, right? As we talked about earlier, there's a hard correlation between the growth in the US debt and the price of gold. So therefore, there's been plenty of currencies that have gone to zero. Most recently, 10 years ago, I think it was, with the Zimbabwe dollar. How many Zimbabwe dollars buy an ounce of gold? I mean, it's really infinite right now. So other currencies, right? The German mark during the Weimar Republic, right? It's infinite. Confederate dollars, it's infinite. So the point is, you can't say gold is at a high. You have to look at why, or what brings it to this number. And is that still valid? And yes, the US, they say, is creating $1 trillion of new debt every 100 days. So no, I would say gold is not at its high. And looking at it, thinking it's at a high because you value it like stock or a bond, that would be would mislead you and prevent you from taking a position, which I think you should, to preserve your wealth.
Right. And maybe we can just get a little bit more additional context on the price potential, because I remember in previous conversations, you talked about gold being in the third leg of a secular bull market. And this is when eventually we get that blow off top for gold. So maybe just any additional details that you would share there on gold's price moving forward.
Well, thanks. And you're exactly right. So early on in this decade, the research I said, we are going into a classic secular bull market. Those can run 20, 25 years, maybe a little bit more. And that first leg really ran from 2001 up until 2011. We did a multi-year pullback, and we are in the third leg. We've been in it for several years. The third leg is where the greatest gains are. They call it, it ends with that parabolic blow off. And regardless of the movement that's happened over the last couple of years, we're not there. Again, because the drivers driving the price of gold higher are all firmly in place and really accelerating. And also, even from participation, it is not, as a matter of fact, U.S. retail investors right now are one of the weaker buyers in the global market for gold, regardless of how successful or how well gold has done. So they're far from piling into the market. So despite where some people may think we are, I think we're still in the very early stages of this third leg. As far as a price prediction, really don't want to go there, but I would think it's substantially higher. I just hope we take our time getting there. And the reason I say that is, you'll hear people say, well, gold's going to $10,000, $25,000, $50,000. And I know some people get excited and they'd like that to happen. But I don't know if we really want to live in a world if gold shot up to even $10,000 quickly. That would mean huge financial dislocations and problems that come along with that. So, for the best would be really, it's not going to stop the ongoing devaluation of fiat currencies and a orderly rise to gold. But I don't rule out that you can get that big move, big dislocation, because there are so many powder kegs around the world, whether it's geopolitical or macroeconomic, that we could wake up and see a very, robust, huge move up. So I think you need to be prepared for anything.
Very true. And I think that gives us a nice look at the long-term perspective there. So if we move over to a little bit more short-term current events, we do have this week the Fed's meeting, and people are really looking forward to this. And I think at this point, it seems definitely guaranteed that we are getting a rate cut. The question is Is it going to be 25 or 50 basis points? And I will try to post this as soon as we can, but it may not be before that meeting actually happens. So I wondered if we could look at this kind of from both directions. I'm curious if you think when it comes to gold, if we get only that 25 basis point cut, will the market be disappointed? Any thoughts you can share there?
I'm sure there'll be some disappointment. And what will happen, at least in the gold, you'll get that initial move. But I'm going to even go back to me, it's just noise. Because even when they started with rate hikes, that was supposed to be the demise of gold, right? The gold price. And what happened? Yeah, you got the knee-jerk reaction where, okay, rates went up, so you can earn, you earn some yield and quote unquote risk-free assets like treasuries, and that will hurt gold. And it only lasted a short period of time because you have to step back and see what's, in my opinion, and see what's really happening on the big picture. And the big picture is, again, not to be redundant, but it is quite simple. The growth and the debt and the dollar or the euro, if you're measuring it in euros, is unrelenting. And there's going to be little news stories that come out and everyone's hanging on what the Fed does, but the economy can't go back. We're stuck with this massive, unrelenting debt creation to keep the whole thing, propped up. And regardless of a news story and to me, it's really just to divert people's attention, right? And think like things are going to get fixed or we're going to get on the right path with a rate cut here or a rate hike there, depending on, the situation. I think big picture, and it's proven, we've gone through rate cuts and rate hikes over these 24 years. And at the end of the day, despite some short-term moves, gold keeps moving up because the big picture, nothing's going to change. So, yeah, we'll get if it's 25 basis points, maybe gold won't go up as much as some people had hoped, or maybe it'll go down because they say it's been priced in already, right? That's likely to happen. But again, it's irrelevant, in my opinion. And if there's a disappointment in the rate hike, and gold takes a little pullback, like, maybe even today, gold is down $12. That may be anticipation saying, well, I think the Fed's only going to go to 25 basis points. So there's going to be that disappointment. I would say to a real investor, are you looking to preserve your wealth? Are you looking to put that cornerstone in? Use it as an opportunity to get in a few dollars cheaper. But it doesn't really matter because the path we're on is pretty much set.
Okay, I think that's a really good reminder for everybody who is watching the Fed with bated breath there. So again, looking at that larger perspective, in previous conversations, we talked about where is the U.S. economy headed overall, and you'd mentioned a possible stagflationary period. So I wanted to check in on that and see if that's still what you largely see coming.
I think that's a risk. And I guess one of the biggest challenges you're hearing a lot of, or you're seeing where a lot of data that comes out from different agencies it appears to be inaccurate, whether it's by design or by accident, but it's not reliable, right? Because everything is about shaping opinions and shaping means and making that the reality, right? And I know that's that's going to a different type of conversation. But there's so much propaganda and there's so much telling people things are better than they are, despite what they're experiencing on the day to day, that a lot of these data points that people rely on to measure or tell you what the state of the economy is, you can't count on them because they're just not honest. So I think from our perspective, even looking at customers, I see a lot of people struggling in what you would call the smaller to mid-sized customers. I see the very large accounts like family office, ultra high net worth, they're doing quite well and they can add to their positions. So I think there's a lot of stress. I think there is, they manipulate a lot of statistics to show what inflation is. Inflation is high. I think it's sticky, but I do think the economy is struggling. So that risk of a stagflation is real. I think we have a reasonable probability of entering into a period of stagflation.
Okay, I've got one more point on gold that I'm hoping to bring up, and that's we're heading toward an election in the US, and already we've seen quite a bit of turmoil around that, probably more to come there. Any thoughts on how that could impact gold, if at all?
So Charlotte, you're right. I think it's going to continue. I think kind of the chaos and everything we're seeing is not going to stop, right? I think it'll only accelerate because the closer you get, I think the crazier it's going to get. Because gold generally does thrive during periods of chaos and uncertainty, that would probably say it will be supportive to the price. It may not drive it real high, but I think it'll support the price because at the end of the day, when you're a fiat currency, what you're really backed by, besides it's a full faith and credit, right? And if our outsiders or even people within look and they see instability in the system and division, that's not good. And I don't believe a country can remain completely divided, at odds within itself and with a lot of the world, and have a strong, robust economy, right? You need, financial prosperity, a stable currency, and good growth, comes hand in hand with stability and predictability. And, if that's going to be tested or proven that there's a lot of instability, that's going to be a driver for gold, unfortunately. But that's, I think, an investor, regardless of what they'd like to happen in the market, they need to prepare and invest with what's at hand and what's real.
Right. And just a follow-up question here, before we turn the camera on, when we're speaking about the upcoming election, you'd mentioned neither candidate is talking about balancing the budget. We have the growing debt. And of course, that's a tailwind for gold as well. So anything you would add there?
Yeah, that's a great point, Charlotte. Up until about 8 years ago, maybe it was 10, you'd hear politicians talk about balancing the budget and getting the fiscal and financial house in order. No one even says it anymore. You'd look silly, right? Which is just that admission. Again, when I said gold is driven by the growth in debt and the creation of money, they won't even give lip service to it anymore because it seems so outlandish. And now it's just about the reality is debt will always grow and money will keep created. That's why inflation is with us. So, again, it just goes to, in my opinion, prove that those drivers that will continue to support the price of gold and continue to propel it are firmly in place. And there is absolutely, not only is there no political will, but it's really, we passed the point where it could even be done, right? The economy could not survive with balanced budgets and reducing and paying down debt. So since that's in place, to me, it's kind of a layup. It's kind of simple. Again, investors shouldn't make it more complicated than it is, at least with this part of their portfolio.
Okay, I think that gives us a really good overview of what's going on with gold. And before I let you go, I want to spend a little bit of time on the other precious metals, starting with silver. So I know silver has been frustrating for investors this year with gold at or near all-time highs. And silver has gone above 30, but not for very long. So for silver, when you look at that, do you see a catch-up coming in 2024 or not yet?
I think silver will have see greater gains in 25, the early part of 25. It's always a laggard to gold, and because they're really very different. I mean, gold is money. Central banks buy gold, they don't buy silver, right? Silver is that quasi money and monetary metal. Do I think it has great upside potential on a percentage basis? Absolutely. But it lags gold. It will always lag gold. It frustrates investors. It's always more volatile. But you just look at who the buyers are, right? Silver tends to be speculative money. And of course, smaller buyers. Gold, long-term hold, store wealth, and a lot of sovereign wealth funds and central banks. So they're really different markets. But it doesn't mean silver's not good, but it's a speculative play. I don't see silver running to 50 by the end of the year. I mean, I could be wrong, but I think if we ended the year at like 35, that would be great. And that would be on its, it would be a reasonable return. But the bigger gains for silver, I think would come into 2025. This is, though, a good time to accumulate. So for those who have some gold in their portfolio and want to start to build a silver position, it's not too late, but be prepared. We may go down and test 2027 and 26 again. That wouldn't be a shock, but it's a little bit different. And, I think they're much more different than a lot of individuals, believe or understand.
Okay, so we'll be a little bit more patient for silver, and looking just briefly at platinum and palladium. Any thoughts on how those prices may play out in 2024 and beyond? And because I know platinum at least definitely has pretty positive supply demand fundamentals. And just for context for people, I ask you about all these other precious metals because they're all contained within Neptune Global's PMC ounce. So any thoughts there?
Yeah, platinum and palladium, there's certain things about them, like how they're mined, and they come from only a handful of areas, and Russia and South Africa being the primary. And you would think with limitations like that, as far as their availability, that the pricing would be much stronger than it is. But, they are truly reflecting the opinion that the economy is slowing down globally, which it is. And they're really industrial metals, right? At the end of the day, especially palladium. So yes, they're part of the PMC ounce. And in our opinion, the PMC ounce was a great way for clients to get exposure to actual platinum palladium, because it's actually physical platinum palladium fully allocated into the account that backs the PMC ounce. I believe it's the best way to play it, better than going into the metal directly, by your own individual bars and such, especially palladium. That is a very thin market, some pretty big bid-ask spreads and, premiums and discounts. So it's not well suited for individual retail investors. So now they've been down for a period of time. So I believe that they also have some great upside potential. I think they'll lag silver a little bit. But I believe their prices have been where they've at for so long, they're pretty much at a floor. So entering into that or coming into the PMC ounce, you have several metals that, like silver, which is a major component of it, which has a lot of, it's still early in its moves. And platinum and palladium have been basically held, have been down for a long period of time. And they're not going any lower, or at least they haven't been. So it looks like they're showing some good support here. So I think, not a bad time to go into the PMC ounce, get some of that platinum and palladium protection. If you look at how that product has performed versus just gold and or silver, it pretty much has done what it's designed to do, kind of give a blended return and being, having a position across the precious metal spectrum.
Okay, thank you for going into those ones as well. So we've kind of gone over the whole spectrum of precious metals, or most of them anyway. So I'll put it back to you one more time before I let you go. Are there any final thoughts that you would leave investors with right now?
No, it's I would just say that, again, it's still not late. The individual retail investor has been actually kind of more on the sidelines, I'd say, for the last 6 months as these metals have moved up. And I'm sure there must be a feeling like, okay, it got away from me. I missed it. But I would say that's not the case. I would think that, I think a lot of people are reducing stock positions because the stock market is very overvalued. And I'm not an expert on that. But you look at people like Warren Buffett, pretty much he's kind of saying things are overvalued in that market. So maybe it's a good time possibly to take a little money off the table that's been made in the stock market and, build a reasonable position with gold and or some silver, get that long-term store of wealth, that portfolio hedge.
Okay, I think that's a nice place to wrap it up for today, but thank you so much for coming on to go over what's happening in precious metals.
Thanks, Charlotte. I really appreciate you inviting me on your show.
Of course, and we'll have you back again soon. For now, once again, I'm Charlotte McLeod with investingnews.com, and this is Blasi with Neptune Global. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.